What's the best way to report the rental of my equipment?
The other method that we've been using to deduct expenses, there's really two ways of handling. One is if you have relatively minor amounts of income from rentals of equipment, say to the production company, a couple of $1,000s maybe. Those we normally will report on line 21 right on the front of the income tax return as other income, and then we'll take deductions, hopefully enough to zero that out on line 36 as other expenses on the return. In doing so, you can only take expenses up to the amount of income that you have. You can't show a loss using that method. The other is that we put both the income and the expense on Schedule C of the return. That's reporting as if you're a sole proprietor. In that case, you can take expenses that will exceed the amount of income, so you can actually show a loss that would offset some of the W-2 income that you have on the return. The downside is if you don't have enough expenses to equal the amount of income that you had, then in that case, that net income is subject to Social Security and Medicare tax. So you're paying an extra 15.3% on top of the income tax on that amount of net income that you have. So it depends on whether we put it on the front of the return. If we're doing it that way, what you're telling the IRS is that you're not really in the business of making money from the rental of your equipment. If it's going on Schedule C, what you're telling the IRS that you are in the business of renting equipment and making a profit from it. Now, we do have clients that have several hundred of thousands of dollars in rental income each year. It's hard to argue that they're not in the business of trying to make money and make a profit from that. So generally that'll go over on the Schedule C side, whereas relatively smaller amounts, $2,000, $3,000, we'll put on the front of the return.